what's up? This is James Godin. In this video, I wanted to share the basics of what Bitcoin is. Okay, so if you're brand new to Bitcoin, or if you know anybody that's brand new to Bitcoin, this is going to either help you or it's going to help the people that you want to help understand Bitcoin better. Okay, so covered in this video, we're going to talk about 4 key points. The first one being Bitcoin's original design, what it was originally intended to be. Number 2, who invented Bitcoin? Okay, and then number 3, the most common uses today, and number 4, scalability and future use. So Bitcoin's original design was just to be a decentralized, peer-to-peer digital currency. So I pulled this description directly from bitcoin.org. It said, Bitcoin is a consensus network that enables a new payment system and a completely digital money. It is the first decentralized peer-to-peer payment network that is powered by its users with no central authority or middleman. From a user perspective, Bitcoin is pretty much like cash for the internet. Bitcoin can also be seen as the most prominent triple-entry bookkeeping system in existence. Now, as far as the inventor of Bitcoin is concerned, no one knows who it is. Okay, all we have is a name, and this is actually something that I pulled from Wikipedia. But you can search basically any resource online, and you'll find the same type of information. So it says Satoshi Nakamoto is the name used by the unknown person or people who designed Bitcoin and created its original reference implementation. As part of the implementation, they also devised the first blockchain database. In the process, they were the first to solve the double spending problem of digital currency. So as far as the inventor's concerned, not that big of a deal, I guess, because look what it brought to the table. Whoever it is, right, gave us the first ever blockchain technology, right? The first ever digital currency that works, right? That can scale out and be used by millions of people around the world. And it solved the biggest problem with digital currency. I mean, people have been trying to create digital currency since the 1990s, okay? And it's taken, that long to be able to solve the number one problem, which was double spending, where, you could send some digital currency to someone, and then that transaction could just be repeated over and over and over again, essentially trying to spend the same money again and again and again and again, which is a huge issue. I mean, that should be pretty obvious why that would be an issue. But they solved that with Bitcoin, whoever they are. We don't know exactly, but it's amazing that that was solved, because that was solved. Now we have Bitcoin, we have Ethereum, we have Litecoin, and all these other coins out there, right? We have, and even the split into Bitcoin Cash and all that. All those things are possible because whoever invented Bitcoin invented and gifted the world with Bitcoin. So the most common uses today are as a digital currency for goods and services. So before the price of Bitcoin went through the roof and to the moon, really, where at the time of making this video it's somewhere in the $14,000 to $15,000 range per coin, it's so much higher than a lot of people predicted that it would ever be. And for that reason, people have really stopped using it as a day-to-day currency, where it was being used a lot years ago for digital transactions all the time, right? One of the famous cases of it being used as a currency was when a guy went and spent 10,000 Bitcoins on 2 pizzas. And then people have done all kinds of math on that, and taking it from the value that it was when that happened until the value of what Bitcoin is today. And it's just, I think it's like $100+ million worth of Bitcoin that was spent on 2 pizzas. So it's pretty insane how Bitcoin has grown. And because of that, it brings me to my second checkpoint here, which is that it has really become a digital asset for long-term holding. It's become what people have been calling gold 2.0. In fact, even Goldman Sachs has called this the new gold, right? Because it has become such a great store of value over a long period of time that people see it as a way to hold value over years and years and years. Okay, where a lot of people have actually taken their money out of gold and out of silver and out of other assets, and they're putting it into Bitcoin because they see the value of Bitcoin continuing to go up over time. Yes, it's volatile. Yes, it can shoot up by 100% in a matter of days, and it can go down by 50 to 100% in a matter of days as well. But the long-term trend has been nothing but growth. Right now, there's been periods of stagnation where years would go by and it would kind of be pretty level. And then over the past 6 to 8 months, we've really seen this like hockey stick kind of a explosive type of growth. And whether that's going to continue long term in that massive upward trend is still to be seen. But there's no denying that it's an extraordinary valuable digital asset, and people are using it. They're treating it like gold 2.0. So that's another use. And the other use is trading on cryptocurrencies, right? Now, what I mean by that is some people are buying Bitcoin, right? And they had purchased it at a lower price point. They're using their trading skills and their ability to read the market trends to wait until it goes up, and then they sell, and then they wait till it comes down to a point where they feel it would be profitable for them to buy back in, then they buy back in. So some people are literally just buying it at a low point and then selling it at a high point and then just doing that, and that's all they're doing only with Bitcoin. Now there's other people that are more diverse, right? So they look at this and they say, okay, I'm going to use Bitcoin and I'm going to buy other digital assets, meaning other cryptocurrencies that are out there, which are commonly called altcoins, okay? And most of which are built on the Ethereum network, okay? And people will take their Bitcoin, they'll go to an online exchange, and they will buy a different cryptocurrency with their Bitcoin. So they'll spend, say, 0.002 Bitcoin and end up with like 500 or 600 of whatever other altcoin. And sometimes you can end up with thousands or even hundreds of thousands of these other altcoins that are significantly lower price than Bitcoin, right? And then they'll buy those, they'll hold them until the price goes up, and then they'll trade them off. They'll sell them off when the price goes up. And sometimes people will do arbitrage as well, where they will take their Bitcoin and they will buy into super low-cost altcoins on one exchange. They'll do their research, they'll find another exchange in the market that's selling it for a higher price, they'll buy it low over here, and they'll go and sell it high over here. So people are using Bitcoin for all kinds of trading purposes. They're using it for trading Bitcoin just by watching when the price goes high and low, and then buying low, selling high, buying low, selling high, only with Bitcoin. Some people are doing a similar thing, only with altcoins that they are buying with Bitcoin. And then some people are doing arbitrage either only with Bitcoin or with altcoins that they buy with their Bitcoin. So there's all different combinations of things that people are doing as far as trading is concerned on these crypto exchanges, but they're primarily using Bitcoin to fund those activities. So that's another way that it's being used today, and that is a highly profitable thing if you know what you're doing, right? It's also very risky, so I do advise you to, only be, using capital, money that you can afford to lose if anything were to happen in the market that would cause a significant drop in value in either Bitcoin or altcoins or the entire market, right? So obviously be smart about it. Don't go risking the mortgage or anything super important to you, use your play money. Use the money that you're totally okay. If you were to like lose it in a poker game, you'd be fine. Treat it like that, right? Because you don't know where the market's going to go. So just be safe with it, okay? But here's the thing. Open source code, right? That's one of the major benefits of Bitcoin, is the blockchain technology that Bitcoin is built upon is completely open source, meaning that anybody can access this code, and if they understand programming and the language that this cryptocurrency was designed in, then they can go and they can create their own cryptocurrency based on the foundational code of Bitcoin. And that's what a lot of people are doing, is they're taking that code and that basic premise, and then they're taking that onto the Ethereum network, and they are developing their own cryptocurrencies. Now, it can also be used to innovate new technology. All right? That's what Ethereum did. Ethereum said, okay, we're going to take the base code of what Bitcoin has created here, and we're going to build a network that allows people to build advanced applications on this blockchain technology. And that's where we see this explosive growth in the market as a whole, where you see all of these different cryptocurrencies coming out, and companies that are backed by applications and different types of technologies that they're bringing to the marketplace, and they're storing the value of the service and the technology and the applications they're bringing to the marketplace in their cryptocurrencies, right? So we're seeing that happen, and that is happening more and more as the days, weeks, and months go on. So those are some common uses. As far as scalability and future use is concerned, I think scalability has been one of the major focuses for Bitcoin, because people, they see a great value in Bitcoin because it is there's a limited quantity, right? There can only ever be 21 million of these Bitcoin ever created and put into circulation, and that does drive up demand and increase the overall price over time. But at the same time, it creates this worry in the marketplace that will there be enough for everybody, right? Will this be able to scale out? And here's what I've found in my own research and my own personal experience, is that I learned that, first of all, one Bitcoin can be divided into its smallest denomination, which is a Satoshi. It can be divided 100 million times. So one Bitcoin can be divided 100 million times. I believe that's 8 decimal places to the right. Right? So there's, right there alone, you can see that there's already some scalability built into the Bitcoin itself. Then there's other issues that come up as far as transaction speeds and transaction fees, and that's just a matter of speeding up the network, which are being resolved by these hard forks that happen in the marketplace, which is just basically the code being upgraded, Bitcoin being upgraded, the entire network being upgraded so that it's faster, more efficient, and can be scaled up to larger use, so that you can have, instead of millions of people using it, you can have billions of people using it, and not have the transaction fees be sky high or have the transactions take a very long time. So let's kind of wrap a few of those together into what I just said. First of all, Bitcoin can be split 100 million times into what's called Satoshi, okay? And 21 million Bitcoin, if you were to multiply that by 100 million times of its smallest denomination, would equal 2.1 quadrillion Satoshi, right? So there's plenty of Bitcoin in its smallest denomination to be spread across the entire globe, and for everyone to have a sufficient enough of Bitcoin in its smallest denomination in order to literally be a global currency for everyone. But then again, the issue is, can they scale up the network to such a degree that it's able to process billions of transactions in a timely manner, and also be able to do it in a way that is extremely low cost, right? So that's the challenge they face. Obviously, Bitcoin can expand to the 100 millionth of a coin, right? So that's not really the issue. The issue is really network speed, deliverability issues as far as, transaction fees are concerned. Those types of things are the real issues that the brightest coders and programmers in the world and financial minds of the world are working on right now to make this work. Now, that's what the result of them working on these things is what results in things that are called hard forks. A hard fork is just Bitcoin evolving. It means that Bitcoin splits into two versions. So this happened with Bitcoin Cash, right? So there's Bitcoin, and then back in August of 2017, Bitcoin split into Bitcoin and Bitcoin Cash. Now, at the time of the split, anybody that had Bitcoin in their wallet or on an exchange, they had possession of some Bitcoin, got an equal amount of Bitcoin Cash, and then all of their Bitcoin Cash was directly tied to their Bitcoin. But then, anyone who got their hands on in one way or another through trading or through buying it or through earning it in some way or receiving it through donations or whatever way they get their hands on this Bitcoin Cash, the Bitcoin Cash they have became, after August 2017, became completely separate from Bitcoin. So now, today, in 2018 and beyond, if you have Bitcoin and you have Bitcoin Cash, they are two completely separate cryptocurrencies where Bitcoin has really become like gold 2.0, the store of value for long-term holding, and also to be used to trade and diversify your portfolio if you're investing and trading with Bitcoin and other cryptocurrencies. Now, as far as Bitcoin Cash, it's being used more like Bitcoin was originally intended to be used, which is the digital currency, the peer-to-peer transfer of value for goods and services, and also donations and whatever else you want to use it for, but essentially to be a decentralized cryptocurrency, a digital currency. And Bitcoin Cash is faster as far as transaction times compared to Bitcoin. It's significantly cheaper to send and receive Bitcoin Cash than it is to send and receive Bitcoin currently. Obviously, Bitcoin's working on ways to fix that issue, but Bitcoin Cash is a nice short-term solution for what Bitcoin is trying to do long-term. And you never know, maybe Bitcoin Cash will just take over completely as far as what Bitcoin was intended to do. And the way that I see it now is I see it like imagine gold and cash, right? Gold and cash as far as fiat currency is concerned. You put some cash into your gold and you hold the gold long term as an asset that will appreciate over time in value. Now, think about Bitcoin as gold and then Bitcoin Cash as actual cash, only in digital form. Right? If you look at it that way, then you see Bitcoin Cash as the spendable currency, and you see Bitcoin as more of the digital asset that you would hold long term that would appreciate in value over time. Now, as far as the Bitcoin of the future, could actually be something completely different, right? Is the Bitcoin of the future going to be Bitcoin itself, where it doubles as both a store of value and a global currency? Maybe as a store of value it is just a whole Bitcoin or more, and then that's considered gold 2.0, and then maybe the Satoshi, which is the smallest denomination of a single Bitcoin, maybe that becomes like the cash, the digital currency version of Bitcoin, and it is one and the same, only a smaller denomination of the whole. Right? So maybe that's what's going to happen. I don't know. It could, depending on the value of Bitcoin. See, if Bitcoin itself goes up significantly in value, so does all of the smaller denominations of the Bitcoin. Right? I think one time I did the calculation, and if one Bitcoin went to $1 million, then Satoshi, I believe, would be 1 penny. Now, if one Bitcoin went to $100 million, then one Satoshi would be equal to $1. Right? Now, if one Satoshi ever became worth a penny, it'd be a more viable currency, but still on a pretty small level considering it'd be only worth a penny. But if one Bitcoin ever becomes worth $100 million, then one Satoshi would be a very, very viable currency, meaning that it would be worth $1. If it's worth $1, and you have 2.1 quadrillion of them, right, that could ever be out there in circulation, then yeah, that's totally something that could be a global currency, as long as we're able to figure out a way to keep the transaction fees low and to keep the transaction speed high, right? We want the speed to be fast, cost to be low. And that's the biggest challenge right now. Obviously, the Bitcoin itself can expand huge, right? But as long as the value continues to go up for the whole Bitcoin, then the smaller denominations will obviously increase in value as well. The part must equal whatever the whole does, right? So the whole is worth, like I said, 100 million, then the part would be worth $1. That'd be absolutely insane, but it's possible. And crazier things have happened in the last couple of years with Bitcoin and cryptocurrencies, so it's not too far of a stretch of the imagination to see that happening in the next, 3, 5, or maybe 10 years. Now, it could happen that way, right? Or it could be that Bitcoin Cash takes over. It could be a completely different cryptocurrency altogether. It could be like a mutation or evolution of Bitcoin, kind of like Bitcoin Cash, only something completely different with a whole new name and more advanced technology behind it. We have no idea. No one knows. But all I know is this. It's extremely valuable, right? It is used as a currency currently. It's used as a store of value currently. It's used in trading and investing currently. And as long as it maintains at least the value that it has right now and the uses that it has right now, then I'm sure, number one, we're going to be able to profit from it for a long time, and number two, that we're going to find all kinds of uses for it in the future that we just haven't thought of yet, right? So that's my 2 cents on Bitcoin. That's what I've researched, that's what I've experienced, that's what I see and I imagine as far as what's going on right now and where I see it going. And if you found this valuable or you found it insightful, then obviously thumbs up, subscribe, hit that little that bell symbol so you can get updates whenever I release new videos in the future. And I appreciate you taking the time to watch this video. So take care, guys. See you in the next video.